right? Because they paid you for the business. Okay. And so in addition to that, they're going to be wondering, how do they grow it? And then finally, another frequent question for every business that we take to market: any customer, supplier, or channel concentration? Is there seasonality? An example of channel concentration, right? Do you get all of your business online? Right? Or is it all physical storefront and you have very little or minimal digital presence, right? So we increasingly see that channel concentration question coming from smart buyers. Okay. Here we have a list of no cost actions you can take to increase value. I am not going to go through each of these one by one, except to say that, look, regardless of what's going on in the economy or what the stock market is doing today, as an owner, there is always stuff you can do every single day to make your business better, right? That does not cost any money, right? It simply takes time and focus on your part. I will direct your eyes to the bottom of the slide, right? So two things I'd say. So first, I would encourage you as an owner to join, if you are not already, join and get active in an industry group, right? The best owners that we see are active in their industry associations. And what does that signal to us and signal to buyers? It signals that you have your antenna up, right? And that you are looking to learn from others in your space. Okay. And that's really important because there's going to be discussion about vendors and marketing channels and all sorts of fun stuff like that, right? It's just a way to get collective wisdom, from other owners that have walked the same path that you are currently walking. And then the last tip that we have here is to get a mentor, right? A free mentor through SCORE. If you're not familiar with SCORE, it stands for Service Corps of Retired Executives, right? And the Seattle chapter, the Seattle, Portland, Anchorage has a chapter as well, right? So the Seattle chapter, we have a buyer for one of our businesses right now. She bought another business 2 years ago, and she's got a SCORE coach, and we know her SCORE coach. Her SCORE coach is a retired CPA from a big four accounting firm, right? And can you imagine how valuable that gentleman is in helping her evaluate her financials and run a profitable, lean business, right? And that's all free to her, right? So with every owner, I would always encourage you to get a free mentor through SCORE. Next, what does the sale process look like? So at a very high level, we call step one preparation and valuation. Where we would want to start with you as an owner is really where we start with all owners. And the first thing we would do is we would ask for a couple of years of your P&L, of your balance sheet, of your tax filings, right? And any sort of sales reporting or sales dashboard you have. And we would use that to have a conversation based on data, right? The valuation databases with transaction comps about an achievable, defensible valuation range for your business, right? And at that point, you as an owner, like you have some thinking to do. Perhaps you need to talk to a spouse or your kids or a financial advisor or your CPA, whoever it may be, right? And if you tell us that you're ready to begin, then at that point, right, and commit, then at that point, we would go through the rest of these steps. But there's never a cost, right, to have that, to go through that valuation conversation. And the idea here is that we get to know each other a little bit. You see the quality of the analysis, right? And then, of course, that you have the data, right? And at some point in the future, the time will be right for you if it's not right today. So we've listed some of the other steps that happen in preparation and valuation, right? A big part of that is preparation of confidential marketing documents. We have examples of these, and there's more about that online on our site, right? That we can share with you. Phase two, right, is when we are live, right? We're live on 5+ online business for sale marketplaces, right, or websites. In addition to that, we are proactively reaching out to buyers via our buyer list, via a lot of social media marketing that you probably already are seeing us doing if you're listening today, right? And then we'll reach out to targeted buyers within your space, right? And we'll talk to you carefully about that before we go and do it. And the idea here in this phase, right? This is really where we're screening, vetting, verifying buyers, and then we're spending a lot of time with them to answer their questions about your business. The goal of phase two, right, of step two in the process here, marketing and negotiations, is an executed letter of intent. And think of a letter of intent as a deal outline for your business. Okay. And so, this has transaction price. Importantly, it has deal structure. It addresses how large balance sheet items are going to be addressed. So the cash in the business, inventory, if you have loans on expensive equipment, like any of those fun things, right? We're going to get in front of and we're going to document the treatment of those in a letter of intent. Once we have an executed letter of intent, then we are formally in phase three, which we call simply working to a successful close. There's four things that happen concurrently in phase three. The first is due diligence, right? So that's the first. And our buyer in due diligence has the right to a lot more financial information about your business, and we'll help kind of shepherd that process and make sure they get appropriate questions addressed, and then also push back sometimes, right? If the questions get a little too nitty gritty or granular in due diligence. Second thing that's happening in phase three is drafting of legal documents. So while we're working with the buyer on their due diligence, you as the seller are going to have an attorney and our buyer is going to have an attorney, and the attorneys are going to be working together to take that executed letter of intent, which is a deal outline, and they're going to be taking that letter of intent and mapping it to a full blown out legally binding purchase and sale agreement, right? In addition, right, so we're still in phase three, right? Step three is financing approval. Okay. And so while the attorneys are working, while we're working with the buyer on due diligence, the buyer's lender is going to be involved, and the buyer's lender is going to need to do credit checks and underwriting approval checks, right? They're going to need to do their own financial analysis about your business. And so that's really what where the financing approval comes into play. And then finally, when those three things are all kind of showing green or greenish, right, we will work with escrow, we'll loop in escrow, right, to help us legally facilitate the transfer of the business from you as the seller to our buyer. Okay. Next, on these next two slides, really, we have top 10 kind of things every owner wishes, that most owners wish they knew after a sale process or kind of at the outset. And again, I'm not going to go through all of these here. You can read them. I would just say that there's a lot of learned wisdom from deals in these 10 steps. And, one of the big ones here, so confidentiality really matters, right? And so this means you can't tell your top employee. You have to be very, very careful talking about your plans to sell the business. If you're physically in your business, like in the building, and there are employees around, we talk to a lot of owners who go out to their cars to talk to us. And we also have a lot of early morning and late in the day calls and Zooms, right? When employees aren't typically around. Let's see here. Number nine, I'll point out. So, buy a buyer for your business. Like many of the buyers that we see are sophisticated, right? And they're quite sharp. Many have acquired businesses before, especially if they're a part of an investment group, a private equity firm, et cetera. Like this is their day to day evaluating small and medium businesses. And so, really, there's a saying that every business is sold three times, and most people forget about the quote unquote the third sale, right? So first sale here is that you as the owner have to commit to the sale process. Second sale is when the buyer commits to buying the business, right? Buying your business. But the third sale, right? The third party at the table on closing day, so to speak, is the lender. Right. So the math's got to work for the lender too to fund the deal. So even if the seller and buyer agree and the math doesn't work for the lender, guess what? The deal's not going to get funded and we can't legally record the sale, right? We can't move forward with the sale process. Frequent owner questions, and we have a lot of resources. So if you go to our site and you check out the resources, the resources link in the navigation, you'll see a lot of different articles addressing every single one of these questions, right? If you're not a reader, there are short videos. Most of the videos are under 2 minutes in length when we say short, addressing each of these questions. Asset versus stock sale, very common question. What's the difference between those? What's normal depending on the deal size or for your industry? There's different ways to measure cash flow or profitability, right? And we see a lot of owners confuse these terms based on Google searches or perhaps what they heard from their neighbors, uncles, dog sitter, right? About selling their business, whatever it may be. So seller discretionary earnings. A lot of people in the headlines of larger companies, they see EBITDA multiples mentioned. That stands for earnings before interest, taxes, depreciation, and amortization. Next, how do licenses and permits work? We're selling a plumbing business right now in Whatcom County, right? We've sold a couple restoration businesses that have general contractor license. We're selling a sewer and drain business right now. So all sorts of different licensing issues to navigate with different businesses and how that works in the legal documents. What to do when a buyer approaches you out of the blue, right? It's rarely in your best interest as an owner to just serve up your financial documents to a buyer, right? It doesn't create as much leverage in a negotiation if we're just talking to one party. Treatment of inventory and fixed assets. This can be a big one for some businesses. We had a stone business last year that had $1 million, right? $1 million in inventory. We had another retail business last year, high-end strollers, right? The strollers were $1,500 a piece, right? Buying them directly from China at $600 or $700 and then selling them for $2,000 online, right? And so things like that, like the treatment of inventory, how that's going to be handled in a sale is a significant consideration. How we maintain confidentiality. If you're listening carefully here, you'll notice that you'll never hear us say the name of another owner or another. So the name of an individual, right, that owns a business. We'll also never say the name of a business, right? And so again, we have systems and processes that and tools, right, that we use to maintain confidentiality for every business that we work with. And then creative deal structuring, right? And this has become really important here in the last 24 months. So things like rollover equity, seller financing, earnouts, right? And then there are other creative deal structures beyond those three core kind of ones. How much tax will you pay on a business sale? This is a really common question. So, okay, you're valuing my business at $2,850,000. I understand what your fee is as an M&A advisor, but how much tax am I going to pay? Is it capital gains tax? Is it ordinary income tax on sale proceeds? Right. And oh, I heard about this thing called the Washington State Capital Gains Tax, right? Where does that come in? And the last question up here, of course, is how do we get paid, right? We get paid on a straight success basis, right? Or commission basis. The larger the business sale, right? The larger the transaction price, of course, the less the percentage is. And so there's a sliding scale for that we'll talk about with you. And then last, right, if you want to talk confidentially, if you're ready to talk, great, happy to talk to you and would love to talk to you and learn more about your business. You can go online now and in 3 clicks, you can book a consult to talk with us as soon as tomorrow, right? So we always have availability on that calendar there for initial consults. I encourage you to do so and take us up on that. Even if you think you're a little bit away from it, right? We can still give you a couple pointers that will help you, right? As you position your business for sale in the next 6 months, 12 months, or 2 years, right? Whatever it may be. And then if you just like to talk, right? You're welcome to call up our main line, right? Which is here at the bottom of the PowerPoint. It's the 206-703-355. And then I've actually put up my cell phone number on here too. You're welcome to simply text that number if that's your preferred communication method. Okay. Again, we look forward to working with you. Many of the businesses that we transact are in Washington and Oregon and Alaska, but we've also transacted businesses in Ohio, California, and soon Arizona. So excited to work with you, irrespective of where your business is at. Again, I'm Ryan Emmer at Washington Business Brokers. Thank you for joining us.